Hey everybody, welcome to the live streams of Global Trade Live. Today is 11th of March and we are now live in New York session over here. So let's begin with the analysis. I hope my voice is audible to everybody. So let's get started. So this is GBP/JPY 30-minute time frame, and if we go to the daily time frame, then we can clearly see that the daily time frame candle is coming all the way down. But the thing is, I have told you earlier that the GBP/JPY daily, GBP/JPY is currently at a very strong level of key level. So that's the issue with GBP/JPY right now. If you look at the gold is currently just consolidating, so nothing much is happening in gold. So I'm gonna keep my focus on GBP/JPY only, because I really think that we can really get a nice trade in GBP/JPY. So the thing is, in the next 1 minute, the current 4-hour candle will be closing, and if we look to the left, if this candle closes like this, then the next candle can wick up a little bit and then break the low and continue to move down. So something like that can happen with GBP/JPY, but I'm not pretty sure right now, because we need to really look at the other time frames as well to take a trade. So 1 hour time frame is not providing us much of the information, so we have to switch to the 30-minute time frame. So if I look at the 30-minute time frame, then what the market doing right now is market is approaching towards a strong support level, not strong, but a support level which has been created in the daily time frame, or the in the 30-minute time frame. So right now it's approaching to that level only. So what if this current candle, which will be closing in like next 10 seconds, if this candle closes below this area or below the support level, then can we take a trade? Let's see, by going to the left. So if we look at the left, then there is some kind of a noise, you can say, over here to the left. But below this area there is a clean candle, clean range, you can say. We can try taking a trade in that range, but obviously I'm not very sure about this one over here, because I think that now market can move a little bit more down. But obviously, if this candle even breaks the low of the previous one, then what can happen is it can come down to this level, and then it might just reject the area and go up from here. So let's see what 1 hour time frame is telling us. So by looking at the 1 hour time frame, 1 hour time frame looks like a clear form of resistance over here. And if we just adjust these levels over here, then we can clearly see that the 1 hour time frame is coming all the way down, creating resistances and then breaking the lows and going all the way down. So what we can do actually here, once this candle breaks the low, we can try taking a trade at this point, because market might go down 10 pips, because yeah, I think that can be the case. So I'm gonna go to the 4 hour. 4 hour looks like the same thing can happen. And in the 15-minute time frame, yes, 15-minute time frame looks strong at this point, so market can possibly go down to this level, 8-9 pips. So yes, I'm gonna take this over here. So once this candle breaks this price, I'm gonna take a short trade. Stop loss is at 9.5, somewhere around that. So let me just open my terminal. So 2%, Okay, so I'm ready with the terminal. So let's see, if this candle breaks the low of the previous candle, then I'm gonna take a sell trade, because the only reason I'm gonna do that is I think that this daily candle went all the way down, and after that it retraced back up a little bit. So till the end of the day, this candle can really retrace back to its own wick. So that's something I'm hoping to happen with GBP So what I'm gonna do with this trade is, as we know that we are on a strong key level coming from the left, what I'm gonna do is I'm gonna take my 10 pips and I'm gonna call it a day, because we really can't say that the market will be going further down or not, because of the key level which is coming from the left, and it's not a normal key level, it's a very very strong key level. Look at this. At this area, so many rejections has happened in the past, like the current daily candle, the previous one, and the previous to previous one, and then in the past as well. So there are a lot of things happened at this particular key level. So I'm gonna just secure my 10 pips if I get that, and I will call it a day. So I'm gonna, let's see how this candle will be going. 10 minutes left for this candle to close. So if this candle comes back down, break the previous candle's low and starts to move down a little bit, that will be some sort of a confirmation that yes, this candle will be moving down from here. So let's see, this can be a high probability trade. Alright everybody, so this candle is coming down as we expected. So let's see if this candle breaks the low or not. So now there is another thing which I would like to mention over here, why I have marked this area as the entry price of my trade. The only reason is that this candle, okay, it's coming down, so we are gonna discuss it a little bit later. So let me just get ready with the terminal to take a trade. Yeah, so this is the reason why I marked my entry level of the trade a little bit below from the previous candle's wick, because I have seen this kind of a thing many times in this market, that whenever these kind of a scenarios are there, like a key level is there and the market is approaching towards a resistance on a higher time frame, like 30 to 1 hour time frame, then what the candle does is it plays with you. It breaks the low of the previous candle and then it retraces back, and then ends up by making a bullish candle, if we talk about these kind of scenarios. But if this candle breaks our entry price level, then the probability of going down is really high. So that's the reason I have marked this area a little bit further below. So I'm ready to take a trade, and just waiting for the price to enter our entry level area. Not yet, not yet. Just one pip away. See, that's the reason this area has been marked a little bit below the previous candle. Because if the market really has to retrace its own wick today in the daily candle, then from here the market should be moving down, because then what will happen is it will bounce back from the exact key level area after, after few hours maybe. See, this is the exact thing I just discussed with you guys, because I have seen this thing happens all the time. So now what can happen is, maybe this candle will be going all the way down, or by looking at the remaining time of this current 15-minute candle, like 6 minutes left. So what can happen is this candle can close a weak bullish candle, and the next candle can wake up, break the low of the current 15-minute candle, and continue to move down. So let's just wait and watch what's gonna happen, and then I'm gonna take some decision. Alright, it's coming down again, so let's see if this time it will go down, or just let's have a look at the 30-minute time frame as well. Yeah, 30 minutes still have 20 minutes left to close, so I think in these 20 minutes this candle can go down, but if not, then I don't know. Let's see. I just know one thing, that this is my plan. If this candle breaks below the entry price we marked, then only I'm gonna enter a trade, otherwise I'm gonna just wait. Because if this candle closes like this, the next candle can wick down and go up as well. If that thing will be happening, then the market is in a sideways movement. So today might be a no trading day as well, but that only depends on how the candles will be closing. Gold is really dead. Gold has nothing. So much of noise, so much. No clarity, nothing. So now we got 2 minutes left for the current 15-minute candle to close. So now what I'm gonna do is I'm gonna wait for this candle to close, because if in the past 13 minutes this candle hasn't moved down, so I really cannot expect that in the remaining 2 minutes it's gonna move all the way down. But what the traders do is they really gets excited whenever in the last few minutes the candle turns their way, and they just ends up, you know, taking a unnecessarily forceful trade, and at the end they lose their money in that trade. So I'm not gonna do that. I'm gonna just wait and really watch the market only. So even though this candle flips back down and go all the way down in the last 1 minute or few seconds, but still I'm gonna just wait and stay away from entering a forceful trade. So let's see what happens. So this current candle has closed like this, and the next candle has started to form. I'm gonna now go to the 30-minute time frame. So now if this 30-minute candle flips back and break its own low, that means we are talking that 15-minute current candle will go down and break the previous candle's low. At that point of time, I can say that that can be a strong confirmation, because a resistance is being formed at that point of time. So if that happens, then at that time the confirmation or the probability of the trade will be increasing much more. So that can be a really nice trade. If not, then I'm gonna just stay away from this kind of a setup, because I'm gonna be very uncomfortable in that scenario. So okay, I'm ready with the terminal again. So now let's see. So now my stop loss will remain over here in at the old position, the previous candle's high now. So because even though this candle breaks the low and goes up against me, at that point of time I will be able to manage some risk. So now I'm really thinking that it's gonna break the low. Okay, I'm in sell trade now, keeping my stops at 188.361, 188 point. $188.361. Okay, so my stop loss has been marked, and the trade is now running in a little profit. I'm gonna the profit has just started, so I'm really expecting now the candle will be moving down. If not, then how I'm gonna manage my risk? So now if this candle break its own high, at that point of time I'm gonna close like maybe 90% of the trade. The only reason will be if this candle is creating a lower wick and the previous candle is a bullish candle. Also, it was a bullish candle on a strong key level from the higher time frame. So that can be a reason the market can go up, and the probability of going up will be increasing at that point of time. So to save my money, I'm gonna close 90% only if this candle break its own high. So I'm gonna mark the area for people as well, so that they will be knowing that at what area I'm going to close 90%. So I'm going to close 90% at 188.324 area. So by doing that, I have risked 2% of the account on this particular trade. Okay, so 2% is my maximum limit of losing money per day. Okay, so now if I really manage my risk at this point of time, I'm not gonna lose 2%. I'm gonna lose like 1%, 1.5%. Still, I will be, inside my maximum risk allowance for every day. So that will be a really nice risk management as well, even though if we will be losing this trade. So this is how we should be planning over each and every trade. We should not go beyond 2% per day. So our maximum risk value for every day should be 2%, and we should be remaining inside that 2% only. And see, we really know how to manage the risk, because think of it like this: if this candle is moving down, then why the hell this candle will reverse back and break its own high? And if that candle is doing that, that means this downward movement can be a false direction of the market in this current 15-minute candle. So that can be the only reason it can reverse back. Yeah, because now 30-minute time frame is also pushing down. But remember guys, if we look to the left, then 30-minute time frame is approaching towards the support area. This trade is only for the wick fills to this area. These wick fills, I believe that's gonna happen. If not, then obviously I'm ready to manage my risk with no problem. So if this kind of a scenario was happening at some other place, like somewhere over here, then I would have chosen to close 50% if this candle break its own high, because it wasn't at the key level at that point of time. So I'm gonna zoom in a little bit, because I think we need to manage our risk. So look at this, it has reversed back and maybe it will break its own high. So we are already ready to manage our risk. So I haven't closed 90% yet, because I'm gonna close only if this candle breaks this price, 188.324. And now look at this. People who closed early now they are out of the trade, and who really waited patiently at that point of time, they are still in the trade. So because there can be a high volume push taking the candle down from here. Let's see what happens. Either way we will be safe. So if I look at the 30-minute time frame, 30-minute time frame has 6 minutes to close. So guys, the thing is, if in this current candle, if it doesn't go down, then it can really reverse back from here. So this should be the candle in which GBP JPY should be moving down. So this 6 minutes are really important minutes. Yeah, seems like it's gonna push down from here. But obviously today is Monday, volume is low, but I think in daily time frame it should be covering its own wick. So many zigzag movements happening right now. Again, it has started to move up. Come on, man. Okay, so I have closed 90% at this point of time to manage my risk, and now the trade is running. So currently, let's see how much percent I have lost. So not even a percent, it's 0.6% I have lost, just 0.6%. So let's see if this candle hits the stop loss or reverses back down. Okay, so I'm out of the trade at this point, and yeah, so let's see how much I have lost in this particular trade. Okay, so in this particular trade where I risk 2% of my account, I have just lost 1%. That means I have clearly managed to save 50% of my daily risk allowance. So that's a really nice thing to do, because whenever you are looking at a trade which is turning out to be a losing trade, then your duty is to really manage your risk and cut your losses really short. So if you are risking 2%, then you should not ever lose 2% in that particular trade. Like in some rare cases that thing can happen. Obviously you have risked 2% and you can lose 2% in that trade, but 99% of the times that won't happen if you manage your risk really well. So yeah, so that was all for today, guys, because I don't know, it's turning back up, so it might go up, maybe not. So, and today is Monday as well, so I'm gonna call it a day right now because today is Monday and one trade is enough for today. So let's meet tomorrow, guys, with some volume. So take care, everybody. Have a great day.